Hello, everybody, and welcome to another episode of Tech Done Different. As always, I'm your host, Ted Harrington. And with me here today is our special guest, Wes Barton. Wes is the managing partner at Third Prime. Wes, thank you so much for being on the show today.
Thanks for having me. Excited to be here, Ted.
Yeah, absolutely. So one of the reasons that I wanted to have you come on our show is because you bring a perspective that I think many of our listeners would really value from. So you are a venture capitalist and you focus on technology, and in particular, you focus on some emerging areas of technology that we definitely will want to sort of dive into. But maybe you can, by way of introducing yourself, just talk about what it is that your fund is. And then, my first question is, what's your philosophy, right? You focused on these areas. Why? And what are you looking for?
Yeah, so happy to dive into that. Quick background. As you mentioned, Ted, I'm managing partner and co-founder of Third Prime. We are a venture capital firm based out of New York City and Nashville, Tennessee, and we've got just over $100 million under management today across two investment funds. And we are focused at sort of the earlier stages. So, we like to call that pre-seed, seed, and Series A generally is where we play. We have historically been sort of thematic in our approach. So we, look to think about where the most exciting investment opportunity is going to lie over the next, 2, 3, 4 years, as we're investing a fund, and really like to invest behind structural tailwinds, big market opportunities and so forth, which, Ted, I'm sure we'll explore a little bit here. We generally are investing, call it $1.5 million, into, sort of a first check, and then we're reserving meaningfully to follow on, invest in those companies that are sort of achieving the milestones that we've laid out together. Really looking to just, try to deliver great returns for our investors, but at the same time, we're mindful of, investing in companies that are providing sort of a positive impact, on all stakeholders as well. So while we're not, sort of positioned as an impact fund, we think that is just, very, very important, mandate, and something that goes into our underwriting, as well, thinking about sort of, how these companies will evolve and sort of, what they'll bring to bear on society.
I love it. So bring me in the room with you. You're sitting in your conference room, or you're sitting on your Zoom meeting right now. But eventually you'll be sitting in conference rooms again. And a founder walks in with their team and they get ready to give you their pitch. How are you evaluating that person or that team? What are you looking for, both tactically, but also the sort of intangibles?
Mm-hmm. Yeah. So I'd break that down, into a couple areas. So, when we're investing at the early stage, we really have to assess the team, right? Oftentimes there's not a tremendous amount of traction at that point. So you're trying to, sort of, read the signals, have they been successful in their past? Is there good, sort of founder market fit? Do they have unique insights? Do they have unique networks that could, sort of help will a company to success? And we like to sort of break things down into sort of IQ, EQ, grit, right? Like, building a startup is very, very hard. We're looking to invest in opportunities that can become multi-billion-dollar businesses. That's never a straight line. There are always many, many obstacles to overcome. And so, one of the frames that we sort of like to, think about is, are they missionaries or mercenaries, right? If somebody's just coming at something thinking, all right, I can come in here and probably make a quick buck, unlikely that they're going to have the perseverance to sort of see this thing through, right? So we like to invest in those missionaries, people that have a higher calling, right, to go build this business, to deliver this product or service. So that's something that we think a lot about. That sort of speaks to the grit point. EQ, you might say, why is that relevant? Well, it's, you got to recruit a team, right? You got to sell a product. You got to make sure that the culture is right. Today, it just becomes, increasingly, complex, and you're not only managing your existing employees, but, all stakeholders, your supply chain, what impact are you having on the wider universe, right? It's a big, big job, and you need the EQ to sort of read those tea leaves, make sure you're managing that. And then finally, sort of that IQ piece, right? Like, this is hard, and you need insights. You need to have vision. You need to have a lot of aptitude, a lot of horsepower, right, to sort of beat the competition. So that's sort of what we're sort of trying to assess, Ted, on the team side. And then sort of, assuming that we have confidence that that's the right team, and not to mention sort of the integrity, piece of it, the fact that there's going to be a good personal fit, right? We're going to be working with these folks 6-8 years, right? It's got to be a two-way street that we feel good about one another. And so integrity clearly is paramount, before, those other three things that I mentioned. Then we start thinking about sort of the business opportunity itself, right? And not that it's all that easy to sort of shorthand, this process, but, you look for sort of ways to sort of hard cut it, and think, all right, well, that's not going to work, or this is not going to work. One of the things that we can do is typically sort of assess market size, right? So again, if you're going to build a multi-billion-dollar business, you got to be moving into a big market, or at least a small market, that's going to be growing rapidly. Generally you want to be investing behind structural tailwinds, right? So, we think a lot about that. And again, I mentioned at the start of the call that we like to think of ourselves as thematic investors. So we think about where are really compelling, powerful themes, right, that are, going to be durable, that'll help lead to good investments. Then we think about competitive landscape, right? So as I said before, how is this company going to win? Is there a differentiated product or service? Is it a must-have or a nice-to-have? How much pricing power do you have? What's the margin profile look like? Do you have virality? Do you have network effects, right? Sort of all these things that go into sort of underwriting businesses, whether you're looking at, public stock or an early stage investment, all very, very relevant. So that's sort of what we're, thinking about is those founding teams coming to the office.
Yeah, that's certainly a lot to process, I would imagine, as you're sitting there and sort of, evaluating all those different criteria. And as I understand it, you focus on a few areas within the sort of overall technosphere. It sounds like fintech and decentralized finance, cryptocurrencies, and some healthcare solutions as well. What is it about, and pick whichever one of them you want to start with, but what is it about these markets that made you say that's where we want to start putting our money and our faith and our time?
Yeah. So, taking fintech, right, it's a very large market. There's, it's not been fully digitized yet. I'm sure, you encounter sort of more analog, antiquated sort of, systems than you'd like, on a regular basis, whether that's, trying to secure a mortgage or, some other, thing that you might be doing with your, with your bank. Right. So I think there's just a big opportunity there. It's by most accounts, the largest, sort of industry in the country. Healthcare sort of back and forth, depending on how you sort of quantify it, but, it's big industry. Right. And so just, coming in, investing in companies that sort of can get a wedge into these things, right, you can really start to splay that open and build, multi-billion-dollar businesses all over the place. So it checks that box on TAM quite readily. As I said before, you got a lot of slow, sort of antiquated incumbents that are quite acquisitive. So it's, you don't have to take this thing all the way out to an IPO. You can get involved with something early, and, there's a long list of potential buyers, right? That's something that makes this space attractive. We also, back to the point I made before about sort of thinking about the impact that our investments are going to have on the broader world. I think what we've, seen, with respect to COVID and sort of other aspects of life is there's, the split of between the haves and the have-nots, right? So we like to think about these things. They're going to expand, access to financial services that can help drive, sort of wealth and efficiencies for folks, sort of across middle America and beyond. So that's something that we think about. We think it's a great investment landscape, and we think there's also a profound opportunity to provide, sort of much needed, sort of service to underserved, populations.
It's interesting, the example that you mentioned with, mortgages, getting a loan. Wow. Is that, as a security guy, going through that raises my blood pressure to such an unsafe level. Because, the things that you see all the time is like, oh, we're going to email your information, or you might put it in a secure portal and then they email it back to you. And you're like, this is so inefficient. So that's really good. I think vibrant example that you mentioned there, and the size of the total addressable market. Definitely. I hear you. So when you're looking at these types of markets and they sort of meet your preconditions, and then you take these meetings with a founding team who says, hey, we have a solution in this market that you like. And then they sort of check all the boxes of what you're looking for, and they seem competent and capable and all that stuff. And you say, all right, let's do a deal. At what point in the relationship, you've already decided you're going to do business together, but at what point after that do you actually know that this relationship will succeed? Because it's certainly not a certainty. So what are the indicators when you're like, yep, this is going to work?
Yeah, look, it's a great question. And you kind of have to be, somewhat wary of head fakes in this business, right? That sort of the fastest horse out of the gate is not necessarily going to be the one that sort of wins the race. And so, having, if you go all the way back to sort of when I started angel investing in 2010, right, I've sort of, learned a lot about that. There are a lot of ups and downs, there are certain signs, clearly, when sort of, revenue is growing and sort of, customers are being acquired, readily, when budgets are sort of, beaten, right? Those are all positive indicators for sure. And you start to extrapolate those things out. And, I would say the thing that's most consistent though, because again, headwinds, tailwinds, those things sort of shift. The competitive landscape can shift on you, so that's why, sort of the lead horse might fall back to the middle of the pack. But the most important leading indicator is that those teams are executing in the way that you expected, right? That they're highly efficient, that they're, say, hey, these are the 3 things that we're going to go do this quarter, and they get them done. Right. Like that to me is always sort of the most sort of important, attribute, when you look at our portfolio and think about, some of the companies today that are valued at over $1 billion, like what's the common thread, right? They are incredible teams, right? They've proven themselves to be incredible teams that have navigated some choppy waters, that have navigated sort of, competitors coming in and trying to undercut them on prices, and they're constantly evolving, right? And iterating in ways that, really sort of, lead them to successful outcomes.
What's interesting about this part of the conversation is thinking about how do we determine what we're executing towards? And what I mean by that is, and maybe let me phrase it as a question. So there are some people who sort of overestimate what they can do in a certain period of time. They might execute a lot of stuff, but they said, hey, I'm going to do 10 whatever. I'm going to do 10 widgets, and they only deliver 6 widgets. And then there's someone else who says, hey, we're going to deliver 6 widgets, and they deliver 6 widgets. How do you sniff out in advance which is happening of these people? Like, are they overestimating their capabilities? Both produce the same outcome, whereas one disappointed you and the other satisfied you. How do you tell what's happening?
Yeah, it usually takes a couple quarters, right? Sort of sitting in the boardroom with these folks to understand if they're the type that's, just going to, maybe sandbag's the wrong word, but, really going to put a number on the board that they know they're going to beat, versus others that like to probably push it a little bit too far, right? And usually are going to fall short. So you don't really know going in. A question I always like to ask is, on a 1 to 10 scale, with 10 being, the most aggressive and 1 being, there's no way you miss this. Like, where do you sort of see yourself falling, right, on these projections and whatnot? And a lot of times they don't even know, right? But there's just sort of, part of their DNA that some people just continually beat, and, other times they could be moving in the right direction, but still not quite as fast as they thought they might be. Right. So you sort of learn, this just again in spending time, with these entrepreneurs. And it's often not that they won't get there, but if they said 6 weeks, you're sort of sitting here thinking, all right, that's probably going to be 8. Right. Mm-hmm. Or if they said, hey, I'm going to hit 10 million this year, you're probably like, yeah, 7.5 is probably what I'm going to say in the back of my mind. There's others that'll say, hey, I'll do 5. And you're like, nah, that's probably 7.5. Right. So you just sort of learn this. I think it's, people like to sort of approach things differently, and the eternal optimist, right, succeed. And then there are these other guys that are just much, much more sober, much more conservative about sort of, the way they're building their business. So I don't view that as dispositive. When I look at sort of the portfolio, we've got some of those folks that have built really successful businesses, but never fully made a budget, right? And we've got some less successful businesses that have always made a budget, but they just didn't sort of push themselves quite hard enough.
Yeah. Eternal optimist. That's a great phrase there. And I don't know if you saw that documentary about the Fire Festival or heard that story, but so you have, yeah, you're nodding your head.
We got pitched that deal.
Wow. Okay. We need a whole episode to talk about that.
Yeah.
So then you lived firsthand. I mean, watching those documentaries, it was really interesting to see this really passionate entrepreneur, pitch this vision. And even though he was ultimately, convicted of a crime for this whole thing, it still read to me that he genuinely believed he was going to pull this off. And to the point where you're like, you're not living in reality. And of course we have the benefit of that in watching a documentary and seeing like, okay, well, this is clearly not real, but you live that in real time. So I won't ask you to tell me about how you dealt with getting pitched the Fire Festival, because I'm sure that's under NDA and all that stuff. But what are the indicators for you when, like, because what you said is some are conservative, some are the eternal optimist, and it might be really hard to differentiate the two. And is there a singular technique?
It's in diligence, right? And, it's usually going to be sort of doing reference checks on a founder, right? Being able to sort of go back and talk to folks that, have been close to them. In the case of sort of the Fire Festival, and to your point, right? My suspicion is he started with, sort of an honest ambition, didn't mean for this thing to sort of, kind of run off the rails like it did. And I think that's why, it's also incredibly important to surround yourself, by folks, on your team that you can trust, right? That won't just be yes men, that'll sort of raise their hand and say, hey, we need to stop and consider this, right? There's a real ramification, right? Like this, if this doesn't work out, let's sort of play that out. Let's do the postmortem on this, right? And sort of thinking about some of those things. So I think, you make a great point that a lot of these entrepreneurs are so laser focused, so determined, and, what might seem like sort of a harmless cutting of a corner, right? Like, you do that enough times and you sort of find yourself like so far off course that you really need somebody there, whether it's a board member, whether it's an investor, just a member of your team that's sort of saying, hey, listen, man, this is not what we expected it to be. Like, let's make this right.
So let's talk about now the sort of other end of the deal spectrum. So you get, pitch this deal, you say, yes, this is right. You invest in it. That company succeeds and they begin the conversation with an acquirer of some sort. Mm-hmm. And so you and your firm obviously are wanting that to succeed, assuming the numbers will, make your return on investment worthwhile. And then there comes this sort of moment or it's not a singular moment, but it's more of a process where these two sides are trying to establish, what is this company actually worth? And tell me which you think it is. And is it more art or more science? Because it seems like everyone describes it as a science. Like, you make this much in revenue, we multiply that by this multiplier based on these conditions, and that's your value. But then there's all these other intangibles that go along with it. So in your view, and you're sort of sitting alongside the founders, hoping to get the best valuation you can, what do you think actually plays out in reality in these discussions?
Yeah, Ted, you kind of, put the right frame on it. I believe the truth is it's an art and some science, right? Early stages, probably more art. Later stages, when you got some real revenue and you could sort of see, kind of how business is, looks at destination in terms of, sort of, again, it's margin profile and, the comparables, how they're trading, growth rates and all that becomes more of a science. But, look, I think, you look at sort of enterprise technology companies, Ted, which I know you've got some experience with, right? Like a lot of those things trading at just astronomical, multiples of revenue right now that have just been historically unheard of. And so, you ask yourself, all right, well, has the paradigm changed, right? Do I sort of need to reconfigure and recalibrate sort of how I'm thinking about, sort of my science here that, these things shouldn't trade at 10, they should trade at 50 now, right? They're a lot more, I think durable than people expected, right? Through COVID, those things grew even faster than people were sort of, expecting or what they were budgeting. So, I do think there's some merit to these expanded multiples. But I think one of the interesting ways to sort of think about this is, I often like to say, begin with the end in mind, right? So if everything went right for a business, like how big could that be? Right? Is it a $5 trillion business, right? Is it $1 trillion? Is it 500 billion, right? And then look at where you're buying it. What discount are you to that, right? Along the spectrum. So if you think, okay, I'm buying this business today that's $1 billion, and a lot of people are sitting here telling me I'm crazy, right? But I've got this thesis that the world's going to move here, and this company is going to be incredibly well positioned, and it's going to be worth $10 billion in not too long, right? And that's a 10x multiple on my money. I can do that. And let the naysayers throw their tomatoes at me, whatever, I'll be right in the end. So I think a lot of it is sort of trying to think about where this thing can be, right? Which there's a lot of assumptions that go into that, right? Which makes investing hard. I like to say that the line between a hero and a goat is very, very thin, right? But yeah, I think at the early stage, it's more art. A lot of times I'm trying to put a valuation on a company that's pre-revenue, right? And what do you have, to underwrite? You got a team, you got an idea, you got a market, you got, at least a vision for a product or a service. And is that worth $10 million? Is it worth 15, 25? Who knows? But, in the day, it's sort of what the market will bear, right? I can put a term sheet on the table and, if they can go out and, get somebody to write them, one at a higher number and they'd rather partner with those guys, who's to say he's not right? And that valuation's not better than mine or more accurate than mine. So there is a lot of art to it, especially at the early days.
Yeah, it's pretty fascinating to hear from your seat, because I think a lot of the members of our audience are themselves hoping to one day, go through that acquisition, or maybe right now, even actively trying to get funded. So what would the advice be to someone who maybe has not yet gotten funding or is in the process of, going to their 50 or 100 investor pitches, which sort of every founder laments? They're like, oh, I went to every single VC on, such and such road. What are the things that you would say to a founder right now? Hey, in the next 6 or 12 months, go do these things, because that's going to make me want to talk to you more than someone else doing a similar business.
Yeah, look, I think it's sort of doing your homework, right? So if you can come in and show that, all right, I've got this idea and, here's why it's going to work, right? And even if it's a small sample set, we had invested, in a company not so long ago, and I won't name names yet because it's still somewhat in sort of stealth mode. But, this entrepreneur had gone out and had surveyed, hundreds of folks, right, to sort of understand how they were thinking about this problem, and had really internalized that. And so when he came into us and said, hey, I need, the first $1 million to go stand this business up, it was clear he'd done the work, right? He knew that if he built this, there was going to be some resonance there. And so, that's something that I think is oftentimes missing. Look, where I went to school or what I've done before I walk into that room, I can't change, right? But I can change my level of preparation. I can change, again, sort of that preparation point. You're going to have some standard questions that are going to be asked, right? Talk about the competitive landscape, talk about how you're going to win, how you differentiated, right? Why you? Those are going to invariably be asked, right? And so to be prepared for those, you can tell some folks come in and they're just sort of on their back foot with some of those questions, and that's never a good look.
That's actually really fascinating to hear, because the amount of work and effort and investment of just time and effort that it takes to get that meeting with a venture capitalist and to show up and not be able to answer the questions that are coming.
Yeah.
Would you say that happens a lot?
It doesn't, but I guess my point is the depth of the answer, right? Like you can tell, like if you say, all right, how big is this market? If somebody says, well, I saw this stat that said it's 10 billion, right? All right, well, that's maybe a top down. Maybe I believe that, maybe I don't. But somebody that comes in and says, hey, I've come top down at it. I've come bottoms up at it. I've cut it 8 different ways. And here's what I think, it is. And it's not just the TAM, guys. Let me tell you about the serviceable attainable market, which I think is more relevant here, right? Mm-hmm. And sort of just showing like that level of rigor, right? So it's not just that you can't fire off some number and probably pull, some reference that says, yeah, that's what it is, but showing that thought behind it, right? That level of diligence that you put into this, because it's likely indicative of how you're going to approach everything with respect to your business.
So for any of our listeners who have not themselves been in the type of room with someone like you yet, but have seen something like Shark Tank, let's talk about how real Shark Tank is. One of the things that is interesting about a lot is interesting about Shark Tank. But one thing that seems to stand out is that the more boring episodes are the ones where someone comes in and like knows their business cold, and it's not even a super exciting business, right? It's like, oh, we're going to make data deduplication. Like there's so few of those types of like really big problems. But the thing that stands out to me is that it happens a lot where the sharks will invest in a company, even if it seems like, is this even really going to be a company? Because they like the entrepreneur. Is that TV, or is there elements of that that's reality?
Well, yeah, again, I think oftentimes we have entrepreneurs come into our office that, we think are great, right? And we say, listen, you got a nice business here. It's just not a venture, scale business, and there's nothing wrong with that, right? That's not what everybody should go out and build. But a lot of the things on Shark Tank are just sort of smaller opportunities, if you will, right? That they're just not going to have the $1 billion ceiling to them, right? They're building some, cool camp or whatever it might be. Like, okay, like that's, nice idea, but not, pretty low barrier to entry, that other folks can come in and, sort of replicate that, or there's just, again, the market's not that large, or the margin profile is not, not that juicy. But, so the show's interesting. Again, I think, they have to sort of fill, a TV program, and they're just not that many $1 billion ideas being, sort of invented, all the time. So it'd be very hard for them to populate that show, with that consistently. So I think that's something. And, do you just go invest in somebody you like? Yeah, I mean, sure. If you're a billionaire, like most of those folks are, and you're just like, hey, look, I have a passion for, sort of addressing this market or trying to help this group of, individuals. Here's a few $100,000. They can do that. I don't think they do that in reality, right? Because what it is, the importance of time, right? Like I've got a portfolio of 40 companies, and we try to run really high conviction, sort of concentrated portfolios so we can lean in and help these management teams, right? So the more you get diluted, the less valuable you are to anyone, right? You're not going to be able to make everybody happy. And so just throwing around a $200,000, $300,000, $400,000, $500,000 check for somebody that's a billionaire is not going to move their needle, right? Just not. And so, that's what I think is, probably somewhat disingenuous there, is like they just can't go spraying and praying, that something's going to work and act like they're actually going to lean in and help these folks, because just, again, there's not enough hour, not enough, time in the day.
Yeah. So let's talk about an idea that I don't think has showed up on Shark Tank for sure. Let's talk about cryptocurrencies and decentralized finance. For many years, people have really been, those that are sort of enthusiasts and supporters of cryptocurrency have been saying, this is going to be the next big thing. And a lot of them have been proven right. Bitcoin was like, what, 5 cents a decade ago, and now it's like $50,000. And when you as a venture capitalist are looking at companies that are trying to play in a space like that, that's so uncertain and so like just an idea almost for a while. And I think now it's sort of reached its inflection point where this is something that will be adopted. Whether it's Bitcoin is the long-term winner or not remains to be seen, but something will. How do you look at something like that that's so murky and uncertain?
Yeah, look, great question. And, if I had all the answers, I'd be living in a larger house. But, what I think is interesting, again, is back to that point of sort of structural tailwinds and sort of thinking about how do you underwrite, an opportunity. And so, some of the things that we've observed, the fact that, sort of when you look at sort of the political landscape, right, sort of lack of faith or declining faith in our government, right? Not just government, lots of large institutions. You look at, sort of how big tech now is sort of, they don't have the trust that they used to. And people are just sort of, thinking about sort of the future. And so, part of the whole sort of Bitcoin crypto movement is sort of decentralization, right? The fact that, there's not somebody that can come in and shut down my Robinhood account, when I want to sell my stock or when I want to buy some stock. I think that's the big draw. And then also, so the decentralization point, the fact that, now leveraging sort of smart contracts and just this novel software, you can disintermediate so much, right? I use as an example, you look at, sort of Uniswap, which is sort of a DeFi market, right? Where you can trade tokens and do certain things. I might not have these numbers exactly right, but, I think they've raised less than $20 million and, they're approaching sort of Coinbase in terms of revenue, right? And, Coinbase has raised $550 million and they have, hundreds, if not even thousands of employees, and Uniswap again is, just doing it all via software and, they're going to run 90% margins or better. And, Coinbase will run, making this up again, 20, 30 maybe. Right. So what would you rather invest in at that point? Right. So to me, that's what is so powerful. And yes, Ted, as you said, we got to navigate though the regulatory waters, right? There's still, you're in cybersecurity. These protocols are getting hacked, right? Money's running out the back door. We haven't sort of been able to shore that up yet. There's a lot of risk involved here, but I'm always sort of taking the 10-year view. And I think if you look at total value lock, sort of the money that's sort of flowing through this DeFi space, right? You go back, it was $1 billion not so many months ago. My last number, it's over 50 now, right? Like you just cannot, as an investor, right? As somebody that's trying to think about where the future is headed, you cannot sort of disregard those numbers. Yeah. And so, and I think when you think about that, and think about the unit economics, you think about some of these structural tailwinds around this, decentralization, disintermediation, democratization, right? All that like points to like this, sort of DeFi space in my mind.
Man, I want to go buy some cryptocurrency right now. That's all I'm going to do afterwards. Oh man. Well, that's great. Well, Wes, you've been really awesome. Thank you for all the insights today. As we wrap up, what is your view on the next, say, like 12 or 24 months of what's going to be happening with venture capital in technology? What's coming around the corner?
Yeah, so I'm incredibly encouraged by the state of innovation. There's so many folks out there that are building exciting companies, and sort of the pace only continues to accelerate. So I'm very, very excited about where we are. To opine on sort of where the market is. I mean, there are a lot of smart people that think the markets are frothy, but they've been frothy for a while. The government keeps pumping money. That's going into stocks and, it's going into cryptos and house prices and so on. So I'm not a macroeconomist. It's hard for me to, sort of speculate on sort of what's going to happen with the markets, but I do know great products are going to continue to be built. Great entrepreneurs, are going to continue to, remain dedicated and have that grit and perseverance that I spoke about before. And so, in terms of sort of the state of where we're going, setting aside, what's happening with prices, I'm very confident that we're moving into, a very exciting world.
I love it. Wes Barton, managing partner at Third Prime. Thank you so much for spending time with us here today. And for everybody else, if you want to learn more about the podcast or appear as a guest yourself, just go to tedharrington.com/podcast, and we'll catch you next time.